What's up everyone, welcome back to another video with the Millennial Finance. Before we start, we just want to say Selamat Hari Raya to all of you that are celebrating. This is our second Raya with the Millennial Finance and we appreciate all the support you guys have been giving us. For those of you who are not celebrating Raya, I wish you all a happy holidays and we all have a super long weekend to look forward to. By the time you guys watch this video though, it's probably the end of the weekend, so maybe it's a good thing to cap it all off by watching this video. We hope everyone is still getting their Do It Raya even though everything's under lockdown and we can't go visiting. But with this Do It Raya coming in, we're probably thinking, what should we do with this money? Some of us may be buying new clothes, maybe paying off some loans, or maybe some of you who have been watching a lot of our videos are coming to yourself and thinking, maybe I should buy a Lamborghini and start saving for it. To those of you, we say, good for you. On a more serious note, for those of us who haven't built up our emergency funds, now or probably around the Raya or Chinese New Year time is probably the best time to accumulate some extra money and stash it right into our emergency funds. If anything, 2020 and 2021 proved how important it was to have an emergency fund, and many people who didn't have the luxury to build it before struggled to make ends meet during this time. So it's definitely a good idea to have this money stashed away so that if anything happens in the future, we have this ready. But how much do we need as an emergency fund and where do we store it? First of all, let's address how much do we need. Most personal finance advice out there recommends everyone saving up to 3 to 6 months of your costs as an emergency fund. I guess 3 months can be a little bit too short, so 6 months seems to be a sweet spot. However, I know some people who advocate or are actually doing it themselves, saving 12 months or even 24 months of their costs as an emergency fund. There's no exact science to this, but it really depends on how risk averse you are. At the end of the day, it's a personal choice because remember, at the end of the day, all of this is personal finance. For example, if you're young, you know that you have high quality skills and if you lose your income, you can quickly replace it, then maybe not having such a big emergency fund can be fine for you. However, if you have a family and you have a lot of responsibility and a lot of bills to pay for, and you know you're slightly older and are afraid that you cannot find a new job if you're let go, then maybe having a bigger emergency fund can be good for you. An emergency fund is basically there to sustain you in case you lose your income or in case any big expenses come up. So when you're deciding as to how many months worth of your expenses that you want to save, just remember that it should be X months worth of your expenses and not your income. Personally, I have nothing against those people who want to have a lot of money into their emergency fund before they start investing, but we just need to remember that there is an opportunity cost with putting too much money into your emergency funds. This is because the returns that you get on this are usually rather low compared to an investment that can get you around 7 to 8% annually. So every single dollar that you're putting into an emergency fund instead of an investment nets you less money every single year. This shouldn't deter you from having an emergency fund, of course. We still highly recommend it and even we have it ourselves. It's just something to take note of when deciding how much of a cushion you want. So there are only 3 things to look for when deciding where do we keep an emergency fund. First of all, the place that we put our money at must be extremely low in volatility and not have large upswings or downswings in price every single day. This should be quite obvious to most of us. It also cannot be a risky investment because imagine putting 10,000 ringgit, which is our emergency fund, into something like Tesla, and then 6 months down the road, I need to withdraw this money, but then Tesla price has dropped. Now I only have 6,000 ringgit worth of my emergency fund left, so that does not work out. We want it to stay at around the same level day in, day out with us getting small returns every single month or every single year. Secondly, even though we know we won't be making life-changing returns through this money here, it should be at least enough to counter inflation. So in Malaysia, inflation is a bit up and down. Last year was of course very low because of everything that happened, but generally it's around the 2 to 3% mark. So there aren't many safe investments out there that can get us this amount of returns every single year, but that's fine. Even if you can get 1.5 to 2%, at least we're slightly offsetting the inflation that's eating away at our money every year. Finally, and equally as important as the first two things that I mentioned, this place that we keep our emergency funds must be extremely liquid. We need to be able to take out our money anytime we want, because what's the point of having an emergency fund if we can't access it? That's not called an emergency fund, that's called, I don't know. Now let's get to the main topic of today's video. Where do we Malaysians have to keep our rainy day funds? The first option that we have is obviously gonna be Bitcoin. I'm joking. Obviously, I do not recommend putting your emergency funds in Bitcoin. This is the exact opposite of where we should not be putting our emergency fund, because first of all, it's volatile, and second of all, it's extremely risky. So Bitcoin, off the table. So the real first place that we can keep our emergency funds is a basic savings account with a bank. This is probably the most common place that a lot of people store their cash. Our money, when we put it into the likes of CIMB, Maybank or Public Bank, we know that it's safe because these banks are highly regulated by Bank Negara Malaysia, and we're even PIDM protected up to 250,000 ringgit. So, perfect place. However, bank savings account generally don't give very high returns, and you more likely than not cannot counter inflation with the amount that you're getting from them. Many banks nowadays have marketing campaigns and claim that you can get very high interest rates on your savings, but these require you to do certain things like spending money here and there, paying your bills with them, and these are all things that I don't want to do because I just want to use this as somewhere to store my money. For others like Allianz, they tell us that we can unlock 2.25% returns on our savings account, which sounds absolutely fantastic, until we realize that they require us to have a small amount of money, which is 350,000 ringgit to unlock this. Easy. So obviously a lot of these marketing tactics are not really real. Generally, we should expect around 0.5 to 1%, which I'm currently getting with both my CIMB and Maybank accounts. One recommendation that I have if you want to use your bank savings account though is you should open up another one just for your emergency funds. You don't want to mix your spending account and your saving account, because then you'll be difficult for you to keep track of how much you're spending and how much you have to have left in your bank account. So if you want one, maybe right now you have a CIMB account, you want to have another bank account just to store your emergency funds, open up a Maybank or any other bank that you like, and yeah, go from there. Next up, we have another very common place that a lot of people store their emergency funds is, which are fixed deposits. I know a lot of people who do. People from work who, when I just started, told me that fixed deposits are the best investments ever because they're completely safe. And honestly, even when I started working, I considered putting some money into fixed deposits every single month and just let it roll and earn money. This is actually a good option, and many people use it because it's a safe investment. It is PIDM protected as well, just like savings accounts, and they have better returns than what you get than putting your money into a savings account in a bank. Also, banks are getting smarter now, and with all the apps like CIMB Clicks and Maybank to You, you can easily transfer your money from your savings account to a fixed deposit with just a few clicks of a few buttons. This is probably why a lot of people use fixed deposits for their emergency funds, because it's so simple and convenient for them to do so, and honestly, that's great. Nowadays, with lower interest rates all across the world though, the rates that we can get with fixed deposits hover around the 1.7 to 2.2% mark annually, and if you have more money, obviously you'll get a better percentage from the bank. So fixed deposits give you the low volatility, actually they have no volatility, and they also meet the high-ish returns to counter inflation. The final checklist that they do also meet is that they are also very liquid, in that you can withdraw your money or redeem your money in these fixed deposits anytime you want. However, there is a penalty to it. So let's say I put in 10,000 ringgit for 6 months in a fixed deposit, expecting to earn 2% or roughly 100 ringgit after 6 months. If after 3 or 4 months, I suddenly need this money because of an emergency, I can redeem the 10,000 ringgit immediately, but I will get 0% returns for the 3 months that I put my money there. This is a penalty for redeeming early. I guess it's not a big deal, but you do lose a bit of money every time you redeem early. The next option we have is actually one of my favorite places to store an emergency fund right now, and actually both myself and my brother use this and they are money market funds. Unlike fixed deposits, the interest from money market funds are typically calculated daily and payouts are made either bi-weekly or monthly. So this means that you don't have a lock-in period like fixed deposits. You can put in your money anytime you want, you can withdraw your money anytime you want, and you'll get interest for every single day that you have your money in there. Money market funds usually have higher returns than saving accounts, but probably lower than fixed deposits because you're not giving the commitment of putting your money there for a certain amount of time. So in terms of returns, it probably sits in between both those assets. Unlike fixed deposit and savings accounts though, money market funds actually have a net asset value assigned to it, meaning it can drop or increase in price every single day. However, they are extremely stable, and if you look at charts of any of them, you can see that they barely move, if ever at all. So the key benefit of a money market fund is that it's low in volatility, it gives us good returns, like okay-ish returns, and it's extremely liquid without the lock-in period like a fixed deposit has. If you guys want to invest in money market funds, you can check out Stashaway Simple. You can use our code, which will give you 50% off management fee for 6 months. The link will be down in the description below. Now we're on to the final place that we can store our rainy day fund, and no, it is not under your pillow. It is none other than Amanah Saham funds. This is a great option for Malaysians, and still to this day, I do not understand how they are doing this for us. So there are two types of funds under Amanah Saham: fixed and variable NAV funds. When you're choosing one to put your emergency funds in, don't choose the variable ones, go for the fixed NAV ones only. This is because the variable ones fluctuate in price every single day, and as I mentioned, we do not want volatility in the asset that we decide to put our cash in. Their variable funds are actually invested in stocks and bonds all over the world, so the fluctuation is much higher compared to a money market fund, so it's a no-go for a place to keep our rainy day funds. So to find out which of the funds are fixed ones, you can just do a quick Google search and go onto their website. There are a few to choose from. For Bumiputras, you can go for ASB, Amanah Saham Bumiputra, or ASB2. And for non-Bumiputras, you too can still enjoy this by choosing any of the funds like the Amanah Saham One Malaysia or the Wawasan 2020. So this will give you the highest returns out of all of the options I mentioned earlier, with Amanah Saham Bumiputra giving out 5 to 6% returns every single year, which is great. We were just putting it expecting to beat inflation. With these returns, we're actually beating inflation and more, which can also be considered an investment, I guess. All of this sounds fantastic, but there has to be something wrong with it, right? And that is, it is slightly less liquid than the 3 previous options that I mentioned. Don't get me wrong, you can still get your money whenever you want, but if it's really an emergency and you need it right now, you can only withdraw 500 ringgit every single month online. If you want more than the 500 ringgit, you'll have to go to your nearest bank, wait for your turn, fill up some forms, and then get the cash handed to you. So still, you can get it any single day you want, but it's just a bit more effort, and you actually have to go to a physical bank, which, let's face it, millennials, we don't want to. Still, it's a great option, and all of you should still consider it because it gives us very good returns. What we are doing is we are actually using a mixture of all of these options except fixed deposits. I do have a bit of money in my savings account, of course. I do have some money in money market funds, and I of course have money in Amanah Saham Bumiputra. All of this sums up to what I need as my emergency fund. I make sure I maintain this amount every single quarter, and I just check back to make sure that I still have the 6-month mark that I need. All of these options have their pros and cons. I don't think you can go wrong with any of them. At the end of the day, as long as you have an emergency fund that is sufficient for you, you'll be doing good enough anyway. So, out of the 4 options that we mentioned, which one was your favorite? Let us know down in the comments below. Thank you very much for watching this video to the end. Give us a huge thumbs up because it's Raya. Subscribe to our channel if you haven't already, and see you guys in the next one. Peace out.